Robotics is now on the radar of investors as NVIDIA's fearless leader says it could be the biggest industrial industry ever. Consequently, investors are clamoring for robotics exposure, and any stock with the name robot in the title is getting a lot of attention. Our eagle-eyed premium subscribers have raised a company called Kraken Robotics, and dozens of them have asked for us to cover it. So here we are, and unfortunately we're not off to a very good start. So our initial checks, market cap needs to be $1 billion or more over a sustained period of time before a stock will fall on our radar. Now, we made an exception because our premium subscribers asked us to cover this, but at $500 million, this is quite a small company. Now, we also require firms to have at least $10 million in revenues per annum. That's not a problem for Kraken as they're expecting $100 million this year. So that current market cap and the expected revenues for this year means their simple valuation ratio is quite reasonable. That's simply market cap divided by annualized revenues. Firms we cover must have a positive gross margin. That's because we don't invest in charities. And for Kraken, their gross margin's floating around 50%. For mostly a hardware business, that isn't horribly bad. Any disruptive tech firm we cover ought to have strong revenue growth, and Kraken certainly has that. They have a 77% compound annual growth rate for revenues over the past 4 years. They're expecting 30 to 40% revenue growth this year. As the name implies, we would expect this firm to have meaningful exposure to the desired thesis of robotics, and this is where we start to run into problems. So the first issue here on their investor relations page is that their most recent corporate overview is from over 4 years ago. And when we look to see what their investor relations team is up to, it points us to this Sophic Capital firm. And as you can see here, they have some blog posts that detail Kraken. Kraken is one of their clients, and you see here along their website this investment ideas. So this represents typically a conflict of interest. If you're going to pay a firm for investor relations, the least they ought to provide you is an investor deck that's updated annually. They seem to have stopped doing that for whatever reason. You want to see quarterly earnings decks that highlight key metrics. All we get from Kraken would be these press releases that contain a great deal of sporadic information. There's no set of slides that investors might thumb through. These investor relations firms that go peddle stocks as investment ideas, we found, are just not to be trusted. When you pay a research firm to issue favorable research notes about your company, that's a huge red flag. Now, I think this case is really borderline because Sophic doesn't seem to be producing the traditional research report with the extravagant price target, and then when you read the fine print, it says, we were paid by the company to produce this. They're not doing that, but this lack of basic investor relations materials is just plain wrong and concerning. So when we look at how Kraken makes money, they describe two revenue segments: products, which is the majority of revenues, and services. And they sort of bundle everything together, and we want to try to better understand what the thesis here is. Is it underwater robots and drones? Is it this synthetic aperture sonar technology they use? Is it underwater lithium batteries? And how do we describe the market they're in and how big it is? Well, when we look at their 4-year-old investor deck, we see they describe themselves as world leaders in underwater sensors and robotics. Now, we always want to invest in leaders, ideally the leader, and I think describing Kraken as a leader in what they do by revenues is quite difficult. They're just not there yet. Now, the firm gives us 6 reasons to invest. 3 of these, I think, really comes down to growth, which they have. They talk about this industry upgrade cycle, recent contract wins validating their IP and technology, etc. So we see that in the revenue growth. When it comes to insider ownership and this strategic investor, Ocean Infinity, we don't really care about that sort of stuff. What's interesting here is when they talk about product sales transitioning to recurring revenues or robotics as a service and data as a service, that's interesting because when you're a hardware firm, you really need to supplement your hardware sales with some sort of software or services sales that have a much higher margin. That helps offset the inevitable gross margin pressures that you're going to face as a hardware producer. So we're interested in exploring that more. And I wanted to make a note here when they talk about this Ocean Infinity firm. Rather interesting, if you recall, the Malaysia flight MH370 that went missing. Rather a remarkable story in that recently the Malaysian government signed a contract with Ocean Infinity, a $70 million deal for them to find that aircraft. And it's noted here that it's a no find, no fee arrangement. Well, I certainly wouldn't want to be invested in a firm that's doing contracts like that. That's really a gamble, right? They only get paid if the wreckage gets found. So all that risk belongs to Ocean Infinity, and they appear to be a client of Kraken. You see they're at least purchasing subsea batteries, so they're not only an investor but also a customer. And it's rather interesting when you read the specs on these batteries that allow for underwater drones to navigate a great deal of time without needing to be charged. Now, this slide on Kraken's business strategy really breaks down what they do. You can see sensors is what they started out doing. Then they have components, which involves batteries, platforms, which are described here, and of course more recently robotics as a service and data analytics. So they purchased a company in 2021 that they now call their robotics services offering. When we think about just how large this market is, they describe it as being worth US $5 billion for maritime robotics. That's just not that big. That's really rather niche, but what we can then do is some back of the napkin math. If the total market's worth $5 billion, then the Department of Defense accounted for $1.3 billion. So that's about 25% of total maritime robotics spending. The Department of Defense remains the largest customer for unmanned, uncrewed system technologies with an $8 billion budget in fiscal 2022. Now, Kraken expects $95 million this year in revenues at midpoint. So that means they've captured less than 2% market share. Who's capturing the other 98%? That's not Blue Ocean. That's a market that's actively being serviced. Is it large defense contractors? Is it marine technology companies? When you look here, see Northrop Grumman, precise undersea imagery. They describe the same sort of technology that Kraken uses, a synthetic aperture sonar, which allows underwater vehicles to image things very precisely. And one of the things that Kraken talks about is industry consolidation. And they put up this table, again, rather dated, but you see the large defense contractors stepping in and scooping up marine technology firms. Now, Kraken describes themselves as a top 100 marine technology company. Whenever a firm doesn't tell you where they placed in that list, you can be sure it wasn't in the top 10. But I think that simply tells us there's a lot of marine tech firms out there, and Kraken isn't a leader in revenues. Now, a simple revenue breakdown is really needed here to better understand what's working. If we look at their oldest product, it's this synthetic aperture sonar, which they're said to be a technological leader, off-the-shelf configurable component that replaces these high-end side scan systems at an affordable price while delivering higher resolution. So this modular component has been integrated and deployed on over 20 different underwater vehicle platforms made by other manufacturers. Now, I like this statement. They say, our product business primarily consists of our Aquapix MinSAS sensors, so that's that radar, catfish systems, towed SAS, so they're simply towing that radar component behind ships, and sea power subsea battery systems, and remote mine hunting and disposal systems. So that's mainly their product lines, and it would be great to see a breakdown of these segments so we can understand what's growing, what constitutes the majority of their business at any given time. Instead, we're only given a products versus services breakdown that you can see here. One thing to note is some customer concentration risk. So in 2023, 3 customers accounted for 54% of revenues. The previous year, that was 63%. So that concentration risk is declining. But notice how in U.S. financial statements, they spell this out in a particular way so that you can tell which customers for each year, whether it was the same customer or not. And I'm sure you've probably seen those tables if you've spent any time digging in a 10K. Canadian filing documents, honestly, are rather weak. And generally speaking, when you invest in foreign companies, this is one of the challenges that you face. Perhaps it's why foreign companies often enjoy a valuation discount for whatever reason. It's often said to be attributed to liquidity. But be that as it may, when it comes to dependencies on the U.S. Department of Defense, that's always a red flag for us because they have all the power at the negotiation table, and you don't want to be overly dependent on a single customer, especially if it's the U.S. government. That can be a double-edged sword, of course. They're quite a big customer. But when we look at the geographical breakdown, we see some hints. They have a big new customer in Asia Pacific. That could be that 11% customer, because this number happens to be 11% of the total. We don't know for sure. There's a large influx of North American sales. We don't know where that's coming from, but we're told 80% of their revenues come from defense and 20% commercial. We'd like to see more on the commercial side, and we'd like to know how much is coming from the U.S. Department of Defense. And we don't care about their sales funnel pipeline, whatever that might be. They seem to talk a lot about that, and we focus only on revenues, and they're certainly not having any problems growing revenues, so that's all we care about. So we don't really know what exposure we're getting here. When you look back to what Jensen said about the big three in robotics, he described agentification, which isn't robotics. In its current manifestation, it's software. It's like robotic process automation. So that's a bit of a misstep there in terms of how he's describing it. But autonomous vehicles, of course, those are robots, and humanoids, that's the traditional robot that we all think of, and those are currently very difficult to invest in. Maritime robots is a niche opportunity that's being serviced by various defense and marine tech firms. Kraken needs to purchase some decent investor relations services, because right now it's rather crummy. There's no transparency into what's working and what's not. That's really a showstopper for us. If services is the robotics as a service offering, which we believe it is, then we'd expect to see increasingly strong margins over time, what they describe as operating leverage. And here you can see the first 9 months of 2024 compared to the first 9 months of 2023. And what you see there is the COGS. Well, this isn't COGS. Again, the Canadian financials rather weak. So they're showing us here COGS plus expenses. I would assume this is operating expenses. So you're getting a glimpse into what profitability is like for each of these segments. And you see profitability declining for the products segment there for whatever reason. But services, you see the profitability increasing. That's what we would expect to see. So the other thing to note, their services growth, they say for the 9-month period, it increased to $15,428 compared to $8,603. So that's a 79% increase. Again, going back to that slide 4 years ago when they talked about how they wanted to see robotics as a service. They wanted to grow into that more than just being a product company. So they're seeing some growth in that respect, although it's probably not as much as they would have planned to see. Now, latest quarter, they added to their working capital with a $52 million raise. They say that might be used for acquisitions in a very disparate space. It would make sense for them to do some consolidation. They sold a total of 32 million shares at a price of $1.60 for gross proceeds of around $52 million. That implies dilution of approximately 15%. Their simple valuation ratio of 6, that's market cap divided by annualized revenues, is in line with our catalog average, and that's quite a decent valuation when you consider their expected growth this year of 29% on the low end of guidance. Now, one thing to note is their quarterly revenues are sporadic. You can see them listed out here in this table, and when you try to understand what's leading to that variability, there's comments from management. Here you can see them describe how revenue in this last quarter decreased due to a lower catfish revenue, that's that toad SaaS, and lower revenue related to their mine hunting and disposal system project, while revenue from subsea batteries and services remained strong. So again, if you broke those revenue components out so that we could see what growth looked like in each, that would be super helpful, especially so that we know exactly what sort of exposure we're getting here. So to call this a robotics company seems like a bit of a stretch. They're certainly seeing quite strong growth, which is impressive, but there isn't enough transparency. As I said before, this company is far too small to be on our radar. Maybe we'll check back in a couple of years to see how they're doing. Now, in the meantime, if you're interested in another lesser known robotics company that NVIDIA actually invested in recently, Serve Robotics, check out this piece next. Thanks so much for taking the time to watch this video today.